fulfilled. We're moving on with our panel discussion. You already know all the panelists, but you do not yet know the moderator of the panel discussion. That's Dr. Monika Machler. She's a member of the Supervisory Board of Deutsche Börse and Zurich Insurance Group. Before joining, or before getting these positions, she held various senior positions in the private industry and the regulatory area. In a few seconds, she will be the moderator of today's panel. I'm happy to hand over now. Thank you very much, Monika Machler, for joining us. Thank you.
Thank you very much. Dear panelists, please join me to go ahead. So, ladies and gentlemen, the panelists are well-known experts of the asset management arena. You know them well. We have heard presentations of all of them before. So it's just for me to give you a warm welcome and to express my delight to have an inspiring discussion. Let me start with some growth discussion. First of all, earlier this year, PwC has issued a report according to which the amount of assets investable by the asset management industry will from now $64 trillion increase to $100 trillion in 2020. Now, this seems to be considerable growth rate. The question, however, is who is taking the benefits of this? Who is profiting of this? And question to you, Urs Wiedlisbach, do you think that Switzerland will take its proportionate share of this increase, particularly the asset managers who are operating in Switzerland for the Swiss market, but also for the other markets? Or is there a risk that Switzerland will lag behind?
Yeah, it's a really big question that you ask here. I think in general, one advantage that Switzerland has is that alternative asset management has been growing here quite heavily, here in the Höfe, in Pfäffikon, but also in Geneva. I think there Switzerland doesn't have to hide. I mean, we are one of the largest hedge fund managers worldwide, private equity is very strong, ILS and so on. So Switzerland in alternative asset management, which is actually also, you can say, maybe a higher margin business, Switzerland is positioned very well and is growing with the different companies, LGT Partners Group and many others, GAM, Man and so on. I think there we have a very good position worldwide. When we look at the normal institutional business, it's just a little bit the opposite. I think the reason is, first of all, the market itself is not big in itself, because we don't have a big home market. And when you look at the banks who were big in institutional asset management, most of them, Credit Suisse sold it to Aberdeen, UBS goes in and out. So the big players are actually not big. And that's a big thing that you see today is it's a little bit the winner takes it all. A BlackRock, an Invesco and Templeton, they are so big and they can offer such a big range of products that it will be difficult, I guess, for the Swiss traditional asset managers. I think the regulator is not really helping a lot. We were so close, just to say this, we were so close to close the shop here. We had 5 Ständeräte in our offices because if the new asset management rules, if they would have come through, we needed to close our shop here. We would have had 2-3 people for the holding and everything would have been in London. So we have to really watch that we don't over-regulate. I'm for regulation, especially when it covers private persons, individuals, but we should not try to be the mother of institutions. They are usually well-known. I mean, just as an example, Adia would have had to take legal counsel if they wanted to invest with us. Audio, who is a big sovereign wealth fund, they would have stopped doing business with us if the rules would have come through, which the politicians wanted to do here in Switzerland. So it's very dangerous, and we have to watch this.
Thank you for this picture of sort of moderate optimism, if I understand you well. Do the other panelists share this view?
No, I mean what Urs said. I think it's very difficult to play on size. I think we're too late. And then the Anglo-Saxon market is so huge that if you want to do a game on size, it won't work. So by definition, the strategy can only be that we need to be innovative, so we have to be more on your chart, more on the niche side. Where are clearly our strengths, and then spend a lot of time and energy on these elements. I think there you have a credible value proposition, and that the Swiss asset manager is producing high quality. I think that's a good reputation. That's a given. So we can build on something, but we have to be really active. This is global competition. In the institutional market, we have global competition. It's not about Swiss, the one versus the other. It's, are you succeeding? Are you driving the performance? Are you the right partner for me? And that's what we have to build up.
Well, I fully agree. We cannot play the big size formula. And we must see, I mean, we are only starting to position asset management as a function on its own. For years, asset management went into private banking, was producing for wealth management, and not really on a standalone basis. We have very few examples in Switzerland, like Partners Group, LGT, some others. But in principle, our story, asset management, was producing for private banking. And only now do we start to position asset management as a function on its own. And so that's, I fully agree, it has to be innovation, it has to be quality, it has to be niches. We will not, it's not worthwhile to follow the steps of BlackRock. That's too late.
I think I can only echo. There's not too much marginal value I can add to this. But I think the big size game is gone anyway. So it's about skill-based positioning, about innovation. The hard thing about the often quoted innovation is to really institutionalize innovation. It still often boils down to small shops, to individuals, and to force innovation is a hard thing to do. The other thing about regulation, I think, even though the regulation made progress, it's still raising the bar for entry. And usually the small players are driving innovation. So 12, if I look back, if the regulation, which is now in place, would have been in effect 4 years ago, we would not have established the company. We could not possibly do it. All the separation of duties, all the minimum institutionalization which was required would have driven us out of business or made us seek for other investor type of constellations. I think that's something to watch going forward. And the last thing I would add is that what you need to drive as a location is the cluster concept, which I really strongly believe in. And there's a cluster emerging for alternative investment managers, which needs to be, I think, leveraged going forward.
Thank you. So this seems to be a commonly shared view that effectively specialization is kind of the name of the game. Now, if we look at what you just were addressing before in your presentation, Pius Fritschi, you were making a strong plea for alternative asset classes. Now, alternatives is something which is on the move already. It's already in the trend. Will it become the new normal in some years from now?
Also, if you look at in all the studies, BCG, McKinsey, about where the asset management industry will be in 2020, I think that probably definitely on the active managed side, the strongest growing part will be alternative. And also maybe also driven again where the market is, because at the end, all at least institutional ones, they need to generate returns. They have liabilities, they need the returns, and if the bond market is where it is, they need to do something. So it might go into alternatives. So I believe there is room. There is at the end, allocations are still very low in most markets. The ones with 40% plus is the true exception. Most of them are like thinking, should I do 1 or 2, or maybe at the extreme move to 3% allocations now. So there is plenty of room. And therefore, I think we have a very good chance competing in that space. We have a good history. So I think there, for the Swiss asset managers for sure, I think that's a highly attractive element. And then what you need for that purpose, I mean, at the end you need to attract good talent. And still the good news is you might not find all the talent in here, but the good news is that people, at least sometimes, they like to live in Switzerland. So bringing them over here, living in this region, I think this is a great plus. And the second one, there I'm a little bit more worried about it. It has to do, if you want to grow a business or a strong value proposition, it has to do with the home base. And there, of course, 10 years ago, we had a very different regime. So a lot of institutional players, the life insurances, for example, the insurance companies, they went at early stage into alternatives. And it was a good ground to profit from and grow as an asset manager. So it would help, if we want to profit from that trend, it would help if we have like a setting around us in the home base which also looks at alternative in maybe the way I described it, and not in the way that this is something really negative, we should not do it, and try to demonize. Yeah.
But as a follow-up, maybe directly to all the panelists, is there enough talent to guide investors through alternative investments? I oftentimes hear the concern that there are some well-known advisors or asset managers, but there should be even more. So, for example, in the area of real estate, in the area of debt, in the area of maybe distressed debt, whatever.
I mean, the problem, I agree completely with Paul, that and if everybody, this is the problem, if everybody goes to 40% like CPP does, we have a problem, because we can't invest this money. Because compared to the public market, where you need at the end a desk and an analyst in private equity, private debt, ILS, whatever, all the alternatives, is also why it's more expensive, is we have to really work. I mean, we need to have 3 or 4 people. Sorry, I don't want to say that asset management is not work, but it needs more people to work, and it's longer. So we need 3 or 4 board members who stay on the board of a company for 3, 4, 5 years. We have capacities issues after a while. And this comes into the play, what you said from before, is for us, I don't want to sound high-nosed, but asset gathering is not the biggest problem. The biggest problem today is to build out the team that we can invest the assets right. Because to find the right people, you can't just get them from somewhere. You need to train them. They need to be international. If you want to be a global player, we have 50 nationalities. Here the good news is that Switzerland, I must say, at least the canton of Zug, I guess canton of Schwyz is similar, very open and nice in terms of when we need people. And this is a big advantage, because there are some places like Singapore is also very, very open and easy, but there are other places where it's more difficult to actually get people, especially when they are not EU, and we need a lot of Indian, Chinese, Brazilian, Chilean, and we need to train them here. And here I guess the Swiss market is, first of all, people like to be here, even though it's a bit expensive, but at least the taxes are lower. I hardly have somebody who comes here who doesn't like to be here from the international crowd, which is a big plus for Switzerland, I think. But the problem is the capacity at the end. I mean, this is the constraints, more or less, of our growth, is to figure out how do we get the talents in and fix it.
Obviously, Christoph, you attract a lot of talent. How do you do that? Do you have a magic touch?
I'm not so sure about this. Well, ultimately, I think our business model is pretty much resource intense. And there's a lot of seniors out there who want to do their own thing. So it's also about the attitude. It's not just about skills. So a niche firm can also attract talent on that base. Having said that, the more senior you go, the less flexible people sometimes are. So this is why we have to go where the talent is. On the other hand, we had a pretty hard time being Zurich-based to attract a couple of PhDs to Zurich, even having studied in Switzerland. There is specific regulation to make entry easier, but we had to, in length detail, we had to explain that we need a portfolio manager. If you talk to the labor office, there's tons of portfolio managers being made redundant. So there's tons of people to choose out there. I would have been forced to onboard these kind of people. So we had to make a lengthy case, and that really ties up a lot of resources, which makes business much more difficult. And if you don't move in that direction to make that much more flexible and easy to accommodate talent in Switzerland, a skill-based proposition by definition has a hard time.
Mm-hmm. Peter Grünblatt, we have seen now a number of challenges. We heard that there is a considerable potential also for this asset management. You spearheading the initiative. What do you think are still strong impediments which, however you are close with your plan which you have laid out also to overcome? There is one particular topic I would like to pick up, which you have mentioned in your presentation, namely this togetherness. What is the challenge exactly therein?
Good question. Well, there's two things. I believe it's laws and regulations, or interpretation of laws and regulations, and it's people. If you are if you talk the people side, we can talk. And we have interesting and open discussions with FINMA, with other CFIN-Bern. However, then, if it comes to the institutionalization, there seem to be certain issues that our supervisory authority, by law, they have to focus on investor protection, to do something for the, how to say, competitiveness, Wettbewerbsfähigkeit. It doesn't say. In the FIN, no, it does not. It says indirectly. It says through their actions, but it doesn't say they have to go out, for example, to Hong Kong and sell Switzerland Financial Center. So it's rather through their actions. So it's a passive view, or again, as I said before, interpretation of laws. I also interpret this Article 5 as they could definitely be proactive and go out. However, other people, they have a different outlay. And the second is what I said before, that apparently in Switzerland, or Switzerland does not do Industriepolitik. So they only do Strukturpolitik. So, and this apparently, and I have not read it, but it's apparently, this is in the Constitution, that the federal government has to do action to maintain a good structure and a well-being. However, it does not mention that they have to do something to promote certain industries. And again, interpretation of certain people is, okay, we do nothing, or we will work somehow against it. But other areas, there's Schweiz Tourismus, 70 million allocated each year, with the same Wertschöpfung as the financial sector, end of the day. That's hidden under the, we do something for the structure. So it's people, yes, we can talk. However, sometimes hiding behind laws or interpretation of laws.
And is there also an aspect of togetherness within the asset management community? Is it only in the dialogue with the regulator, or does it also relate to a common thrust and a common direction amongst the various players in the industry?
Well, within the industry, I must say I only get positive feedback, and I would question any asset manager who's against doing something for the financial center or for asset management in Switzerland. So I only get positive feedback from the industry. A lot of people even want to contribute time and money into the initiative. So there I only see positive aspects. However, then again, looking at London, Luxembourg, even trying to discuss a public-private partnership within asset management, absolute no-go. So within the industry, there is no doubt, I believe, that we have a certain or a good starting point, that there is potential, so that's undoubted.
I think
So there is a plea for
the thing
more
has a little
support.
bit started that, you know, Switzerland was in a very safe haven. We had our private banks, and everybody shipped the money to us, and it was tax evasion or whatever you want to call it, tax neutral money.
It's actually a great performance in tax neutral.
Tax neutral money. So, and this is why, and everybody was saying, you know, the banks don't have a high standing, which is understandable today. The financial industry doesn't have a high standing. This is why, you know, nobody really takes care, and then they started to put up now. Swiss government and Swiss regulators may be right so, because we did definitely things wrong in the asset management industry, but especially private banking industry. Now they want to go in the other direction, and they always overdo it, in my view. And put this all into place actually was not even ready. I mean, one thing that people always say about FINMA, and I don't want to accuse anybody or so on. I know you were at the FINMA as well and so on, but it was really, I mean, it was amazing. We were Partners Group. It was so difficult to get a FINMA approval, we were FSA approved, we were SEC approved, Hong Kong authorities, Singapore authorities. And whenever I was going to a big institution somewhere in Asia, they said, but where is your headquarters? Why aren't you not FINMA approved? I was like, they can't approve us. So we were a case which was a little bit more difficult, because they, make it short, they didn't understand our structures, which has to do that this regulators has been in place relatively late. The SEC is a huge, FSA is a huge building which is in the place since 30, 40 years. We never had it. We now have it, and they try to catch up, and they catch up more and more, but they're definitely, I heard it with a colleague that talked before, tried to start a business in Switzerland. In Luxembourg, it takes you 2 months for an approval. It's maybe too fast there, but FSA in London takes you maybe 3 months. Switzerland can take you 1 year to 2. You can't survive. If you want to start a business, it can't be that it takes 2 years until you get an approval. It needs to be here by 2 or 3 months. It's changing as we speak, but it's a danger for the asset management industry in Switzerland.
I think that, however, it's very useful to articulate these observations also from the industry side. That's why I think I am comforted by the fact that you say you have an ongoing dialogue, which is positive. Obviously, what is being regretted here is this to then lead to actions, to follow-up actions. Now, I have to say that if you ask me and you address me as a former regulator, I have to say that this indirect support to competitiveness is obviously a derivative of how the regulation and the supervisory action is lived. So just what you said with the experience of how you interacted with the regulator in the approval phase, or you have also given evidence of that. As a result of that, I would really encourage you to go ahead with this initiative, to also make the points very, very clearly, very strongly, and don't underestimate how important the syndication process is. It is really building the understanding, building the platform. Now with that, I unfortunately have to close this panel discussion. I got the message that we have a change in the program. I would have loved the public, the audience, to have also a moment to bring questions and observations put to the table, but I have to conclude. I thank you very much for your contributions, and I hope that we have the time to go further with discussions with our colleagues during the lunch break. Thank you very much indeed.
Thank you very much.
Thanks very much also from me. We just got to know that we have a change in our program. Dr. Gregor Gysi, that's supposed to be the next speaker, at 1:30 is delayed in his plane. We heard that traveling by plane is the safest way, but obviously not always the fastest. That means that we'll continue after the lunch break with Carolina Müller-Möhl. As Mr. Gysi will be delayed, we'll switch these two slots. So I've informed you that Mr. Gysi will speak German. That doesn't mean that all non-German speakers need to stay outside just after the lunch break. So just next slot will be 1:30. Carolina Müller-Möhl, thanks for your understanding. Thank you. Enjoy your lunch.